Check out the shares of Chewy. The stock's jumping after Keith Gill, Roaring Kitty. That's funny. Chewy, it's a pet food thing. Now, disclosed a 6.6% stake in the pet products retailer. Finally. Now, this I understand. This I can, I finally understand it. Might have something to do with actual positive fundamentals, since I cannot believe what I spend on this stuff.
Pet food or pet toys?
We get this kibble is, I think, $60 for a big bag, and then we supercharge it with this weird freeze-dried chicken. Mm-hmm. A bag of that costs $80. It's just, and it seems like I'm there every 2 weeks, and I'm, it's like expensive. It's like expensive.
It is.
And you know how heavy those bags are.
No, I
What
don't.
goes in comes out.
Oh.
So I have to, that's another thing. I got to do that today, as a matter of fact.
Pooper scooper for you.
Duty calls.
So to speak.
This morning's pre-market movers. Contessa, good morning.
Andrew, good morning to you. Let's kick things off with a check on shares of Chewy, which right now are up more than 15% in the pre-market, with an SEC filing revealing that Keith Gill, a.k.a. Roaring Kitty, bought 9 million shares in the company. That amounts to about a 6.6% stake, and it makes Gill the third biggest holder of the pet food e-commerce retailer. Shares are up about 40% this year due to better than expected earnings and automatic delivery sales. Meanwhile, Keith Gill's darling, GameStop, the shares are off by almost 6.5% in the pre-market. Perhaps those GameStop investors don't really like the fact that he's picked a new darling.
And meme trader Roaring Kitty adding fuel to another big stock move. Chewy shares surging as Keith Gill reveals a more than 6% stake.
I did want to come to a couple of movers this morning. One we mentioned at the very top of the show, Chewy, which is not up nearly as much as it appeared to be in the pre-market, but the stock is still ahead by some 4+%. One Keith Gill, otherwise known as Roaring Kitty, files with a 9 million share position. That's 6.6% of the outstandings. It's about $243 million worth of stock.
For an individual.
For one guy. Of course, we know him from GameStop, and we know that in this most recent go-around in GameStop, he clearly came out well. Chewy was founded by Ryan Cohen, who runs GameStop, but Cohen's not on the board. He's not part of management now.
Of Chewy.
He sold it to PetSmart years ago and
took it public.
Yes.
Listen, I think many market participants are marveling at simply the number here. Now, I don't know how much of it is margined. I don't know how much financing he's getting or what derivative component here. We're not getting that from the filing. So a lot more questions than answers. I don't have access to Mr. Gill.
You can't trace it back exactly. You don't know what he monetized out of the GameStop options position after that stock pop. It does fit the profile, not just because of the Ryan Cohen connection. It does seem like kind of meme stock Mad Libs. We have a Ryan Cohen piece of this. It's a 15% short position in Chewy. So it feels like that kind of feeds into that us against them. Let's get the shorts type of story. Chewy as a stock and as a business has been a very interesting path, right? It's like kind of this, e-commerce growth at all costs. We don't care about the bottom line story for a while. Boom bust in the stock, and now it's supposed to be moving toward the free cash flow type story, trying to follow the Airbnbs and the DoorDashes and the Ubers. When you went from, just top line to cash flow, it's kind of with mixed results so far.
Let's provide some additional context about Chewy. Chewy announced that it is repurchasing 17,550,000 shares of Chewy stock at the price of $28.49 per share. That works out to approximately $500 million. These shares are being purchased from Buddy Chester Sub LLC, which is affiliated with funds advised by Chewy's largest shareholder, BC Partners. Chewy said they expect this repurchase to close June 27th, and the shares will then be canceled and retired. So in other words, they are effectively reducing the number of shares outstanding by more than 4%. That is very bullish. It appears Chewy wanted to provide additional value to shareholders while also reducing the ownership percentage of the company's largest shareholder. Keep in mind that Chewy was founded by current GameStop CEO Ryan Cohen, and Ryan stepped down from Chewy back in 2018. This morning, an SEC filing shows that Keith has purchased 9,001,000 shares of Chewy stock, a roughly 6.6% stake in the company. And in true Keith fashion, the SEC filing makes clear that Keith is indeed not a cat. Now let's briefly talk about the XRT retail ETF that's been getting a lot of attention recently because this is crazy. Both GameStop and Chewy are held in this ETF. And as of June 26th, the day before Keith's dog post, Chewy was the most heavily weighted stock in this ETF. And as of June 28th, one day after Keith's dog post, Chewy was still heavily weighted in this ETF, second only to one other stock. With this in mind, I'm curious to see the FDD data for XRT, but unfortunately, we will have to wait until the middle of July before that data is public. It is absolutely ridiculous that individual investors have to wait weeks for a data point that should be readily available to the public on a daily basis. The SEC cannot honestly claim that it cares about individual investors receiving proper disclosure about their investments while simultaneously not requiring a daily reporting of failures to deliver. I wonder if short volume and failures to deliver in the XRT ETF have anything to do with Keith's reasoning in establishing a position in Chewy. Now let's briefly touch on the lawsuit that was just filed against Keith Gill. The complaint is 40 pages long, but let me very briefly summarize and simplify it for you. An individual investor purchased 35 shares of GME stock, yes, 35 shares, and a few options at quote artificially inflated prices. The plaintiff accuses Keith of engaging in a pump and dump because he sold and/or exercised his call options and increased his position in GameStop by more than 4 million shares. In my opinion, this is absurd. Keith bought a position with his own money. He shared his thoughts about a company he likes. He posted memes. And by the way, you should read the complaint for this lawsuit if you get the chance because it is absolutely hilarious to read them discuss each of Keith's memes and try to explain them in detail. Keith did not tell anyone to buy or sell anything. And rather than just taking the cash from selling his options and disappearing, Keith instead used that capital to purchase more shares of GME stock. The options were going to expire worthless if Keith didn't do anything with them. Anyone who has even a basic understanding of options knows this, and it should not have been a surprise to anyone that Keith was going to dispose of his options, whether through selling them or exercising them, before they were to expire worthless on June 21st. Personally, I don't expect anything material to come of this lawsuit. I'm not a lawyer, but the accusations made in the complaint just seem immaterial in my opinion. But I guess we'll see what happens. At the end of the day, I don't think Keith has done anything wrong. He is free to invest and trade in the public markets like everyone else. He is free to share his opinions online and post memes like everyone else. And watching the financial press react to Keith over the past month and a half has been absolutely insane. Think about this. They threatened this guy with being kicked off a brokerage platform simply due to the position he held. They tried everything they possibly could to blame the fall in GME's share price on Keith when he had nothing to do with the stock dropping in price. Former regulators, instead of calling out the crimes that market makers, hedge funds, and large institutions commit on a daily basis, instead were calling for a random guy posting memes to be banned from the public markets for life. The absurdity is deafening. I just wish that the financial press and regulators would stop wasting their time focusing on a random guy on the internet and would instead use their time to hold the actual criminals accountable. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers. And we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.